Alright, let's talk about a story that's not just about numbers on a screen, it's about real people, real panic, and a system that's creaking under pressure. Here's the kicker, over 600,000 Victorian homeowners are now in mortgage stress. That's not a small blip. That's a full-blown emergency. And if you think this is isolated, think again. Australia's housing crisis is hitting suburbs you've probably never even heard of, and it's about to get worse before it gets better. Let me break this down. First, let's address the obvious elephant in the room, interest rates. 3 hikes in 2026 alone. But here's the twist, this isn't just about rates. It's about timing. A ton of these homeowners bought at the 2021 peak, right when prices were inflated to absurd levels. Now they're stuck, stagnant home values, sky-high repayments, and zero equity to cushion the fall. If you bought a house in Melbourne's outer suburbs 3 years ago, congrats, you're basically paying rent to your bank with no exit strategy. Now, Queensland's situation. It's a masterclass in debt denial. Brisbane's outer suburbs are drowning in negative cash flow, with 9,500 households plunging into stress in just 3 months. Why? Because when housing prices shot up, buyers stretched their budgets to the breaking point, assuming prices would keep rising forever. Surprise! That's not how markets work. But here's what fascinates me, these buyers aren't just reckless. They're victims of a system that glorifies homeownership as the ultimate safety net, even as it becomes a financial trap. 2-income households are now the norm, but what happens when one job vanishes? Poof! Financial collapse in 60 seconds. NSW's 25% spike in default risk. That's not a statistic, it's a warning shot. Sydney's outer suburbs are filled with people who bet their futures on leverage, thinking property was a risk-free bet. But here's the dirty secret, banks are playing whack-a-mole with hardship programs, delaying defaults but not solving the root problem. And let's not forget the auction crisis. One expert called current conditions the worst in 40 years. That's not hyperbole. That's a death spiral for neighborhoods built on speculation. But here's the angle no one's talking about, this crisis isn't random. It's structural. High-growth corridors, the very places marketed as the new dream suburbs, are ground zero for defaults. Why? Because developers oversupplied, governments underdelivered on infrastructure, and buyers got sold a fantasy of future value. When the music stops, these areas become financial wastelands. And South Australia's 39% spike in Morphett Vale. That's not an outlier. It's a blueprint for what's coming everywhere else. So what's the bigger picture here? We're witnessing the collapse of the 20-year housing bubble myth, the idea that property is an automatic wealth generator. The reality? For a generation, we've treated homes as ATMs, investment vehicles, status symbols. Now, as rates stay high and wages lag, the bill is finally coming due. And here's my hot take, this isn't just a financial crisis. It's a cultural reckoning. Because when 40% of your income goes to a mortgage that's underwater, you're not just losing a house. You're losing the narrative of stability that entire generations built their lives around. What do you think? Is this the start of a market correction, or the unraveling of a system that's been rigged from the start? Let me know in the comments.